Hi everyone, welcome to a new episode of Crypto Tips. My name is Heidi, and today we're continuing on this video series on day trading strategies. Today I've got about 8 tips for you, so here we go. First one, set realistic goals for your profits. Let's say if you're day trading for 12 hours a day, try to get, between 7 and 12% profits in that day. That's going to average out to be about 50% profits every week. Again, if you want to look at the best times to day trade, check out the video I posted just before this, the first video in this series. The next tip I have for you, number 2, is to set your charts appropriately. The time frame of your charts is going to dictate the results of the signals that you're reading in your charts. Basically, if you're looking at a 1-minute chart, whatever signal or setup that you're seeing, pattern that you're seeing in that time frame, it's going to yield a 1-minute result. Just keep that in mind, especially for those of you who are looking at more swing trading or more long-term trades. You're going to want to look at a long-term chart. Tip number 3, another helpful one to look for, is volume. Volume is a great indicator for breakouts. If there's a lot of volume in support of a recent price move upward and the volume is supporting it, chances are that breakout is going to keep going and possibly go quite a bit more than it is currently. And similarly, it can do the same thing. It can be the same indicator for the price moving downwards as well. Tip number 4 might be kind of basic, but it's a good hint for anyone, is a bullish candle can indicate when to buy, and look for bearish candles for when to sell. This right here is an example of bullish and bearish candles for you to pay attention to look at your chart, and those can be a great indicator for you on what to do with your trade. Number 5, this one probably is slightly less for day traders and probably more for swing traders or long-term investors. If your coin that you've invested in has gone up 50 to 100% like within 24 hours, it's probably a really good idea to take out your original investment. Go ahead and let the profits run and see what it does, just in case. But it's a good idea to take out your original investment just in case, especially if there's no news or any kind of announcement that is backing that type of violent upward movement. It could very well be the coin is very well a subject to a pump and dump scheme. If you guys don't know what a pump and dump scheme or indications of that, I highly recommend you check out the video. It's posted here for you in the upper right hand corner. Basically, it could be someone who has a large following on Telegram, on Twitter, on YouTube, what have you. They've accumulated their bags and now they're orchestrating mass marketing of this random coin, and they're trying to tell their people to buy it because it's going to go to the moon, and then it's a pump and dump. So that's why you should take out your original investment just in case to see what happens. Tip number 6, take a look at the RSI indicator. This is what's going to tell you, again, generally for swing traders or for long-term holders. Also for day traders, this could be a helpful tool to tell you if generally that coin is oversold or overbought. Basically, if you're going to be day trading, especially as a beginner, you're going to want to try to day trade in relatively calm times, not times of extreme volatility. You can get locked in a trade, you can lose a lot of money this way, you can be unprepared for a type of extreme volatility that can happen. So if you're looking at indicators of something being overbought or oversold, and it's the scale is extremely one way or the other, just know that you might be seeing an overall trend swing, and with that comes some volatility and some unexpected price movements. Again, that's if you're day trading and it's, you're looking at a relatively small time frame compared to if you're a swing trader. Taking a look at the RSI could really help you decide when to make moves because you want to read, the overall swings of the market. Tip number 7. Don't buy the first bounce. This is a lesson that Toby and I have learned over the years. Typically, it's a fake out bounce and there's one yet to come later on. So for those of you who are trying to time the market, you see a dip, usually the first one isn't the only one is the point. And so, if you're trying to scalp some profits to get the best entry point possible, maybe check out and see if a second dip happens. Tip number 8, speaking of bounces, if you are stuck in a trade, a bounce could be a good time for you to exit. It might not be the most profitable time for you to exit, but it might be a more profitable time if if you didn't exit on the bounce. So if the price is going like this, and then you see that, maybe just exit there, even though you may have bought a little bit higher. That could be your chance to limit your losses as best you can. That's it for this video, but next up in this series, we're gonna cover much more in-depth actual indicators, actual patterns to recognize when you're reading a chart and how you can execute your trades accordingly. So as this video series moves on, we're gonna get more in-depth, more technical, more specific. So if you guys are enjoying this series, I appreciate it if you let me know by hitting the like button and leave a comment down below if there's something specific you'd like me to cover regarding day trading. If there's something else that you'd like me to be covering, if you enjoy these series, let me know in the comments. In the meantime, hit subscribe with a bell notification so you won't miss it when the next videos are coming out. They're coming out every day. But anyway, that's gonna wrap it up today. I'm gonna see you guys again real soon. In the meantime, hope you're staying happy and healthy.